The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me. My name is John Needham. I'll be your host for today. It's a beautiful day down here in the gorgeous Gold Coast in Australia, and I hope it's pleasant wherever you are. Would somebody please type in the question box that you can hear me all right? We have a number of our usual folks are here. Let's see if everything's okay. Can you hear me well? Just type in the question box if you would. Here we are, Mark L, of course. Never a party without Mark, our absolute stalwart, all-time ruling champion. And we've got Frank with us as well. Welcome, Frank. Nice to have you with us. That's terrific. So if you can hear me all right and see the screen, we're in business. So I hasten to tell you this wonderful, wonderful photo you're looking at today as our introductory banner is not my desk at all. That's actually Terry's desk. It's far too tidy to be my desk, but it's grand to have you with us. And lots of exciting things happening, so let's get started here. Okay, so here we are. As you know, folks, markets are rational, orderly, and sometimes predictable. I want to stress that with you a bit more today. We want to make sure that you're aware of the Danielcode time signals. Creating and trading those time signals, the best program I have ever heard of or ever seen. And we have with us a number of our wonderful tutorial guys. Greg Palladini, who's a wealth manager and master trader from California. The other Greg, who is also a wealth manager and flits between Texas and Colorado Springs, depending on where the temperature is at the day. And of course, we have Mark L with us. Jim, welcome. Jim, yes, you can hear me all right. Grand to have you with us, my friend. So lots of our regulars, of course, and Rolf's with us. Oh boy, let's have a look. We've got a lot of people today. Here we are. Akshay's with us. Hello, Akshay. Grand to have you with us. Anthony down in Sydney. Chanel up in Canberra. I bet it was cold there this morning, mate. Dean's with us, of course. Frank, as I already welcomed Frank, that's a new one. Greg, the two Gregs, wonderful to have you with us. And Jim, Peters, lots of Peters. Justin, of course, our amazing, incredible researcher who you heard from so much in our last webinar. And oh boy, I'm sorry it took so long to get it posted. We had to sort of splice together the three videos to get one that we could post for you. That was grand. Justin, terrific to have you with us. Marcel up in Montreal. Welcome, Marcel. I hope you're feeling well. Mark L, of course, you know. Milton. Welcome, Milton. Grand to have you with us. Nathan, of course. Norbert. He's a tutorial guy up in the really cold country up in northern Canada. But I guess he's pretty happy with the weather today. Peter Mack, of course, is not a day trader. Rolf down in Melbourne. Sean in Adelaide. Steve, welcome, Steve. And a few Peters here. And the usual. And Toddy's with us over in Southern California. Glad to have all of you folks and many more coming in. Some of you are just sort of wandering in now, which is fine. So much to talk about today. Let's get into it. So the wonderful Chinese saying, isn't it? May you live in interesting times. And we certainly are living in interesting times. There's so much potential drama around that we're sort of waiting for the other shoe to drop. The US presidential election creates, as you know, enormous emotions on both sides, and it's really heating up now that Kamala's got a mate as well and ready to roll. We're having riots in England. Can you believe it? I find that really hard to believe, but that's what's happening, and it's all over immigration. That's what that's about. Iran is waiting to launch a major attack on Israel, which they've threatened in response to Israel assassinating a couple of their very, very senior people. And the Israeli hostages are still being held in Gaza. That's not getting resolved anytime soon. The Philippines and China are at it over an outpost, really. It's just a reef with an old World War II ship purposely stranded on it, as the Filipinos try to protect their what they claim historically has been their property, part of their country, and the Chinese are encroaching onto that. It's getting to the stage that there's fist fights over it between the Chinese Coast Guard and the Filipino military, and maybe a bit more than fists used the last time, as I understand it. The Ukraine war is still going on. Ukraine's currently running an invasion into the Kursk region of Russia, and Taiwan, of course, is an everyday problem. The Chinese are breaching various no-go zones and no-fly zones pretty much on a weekly basis, just keeping the tension there high. So huge, huge drama. But the markets have been incredibly sanguine. Now, if you read the popular press and see the Japan had its biggest day down, one day down in history, followed shortly afterwards by its biggest one day up in history. So it's all happening there. Now, what's this thing in Japan all about? Well, you would have thought it was a nothing burger. The Bank of Japan raised interest rates by 1/4 of 1%. So the Bank of Japan's increased its key interest rate to around 1/4 of 1% from the previous range of 0 to 0.1. So this is Japan's interpretation of MMT, or modern monetary theory, and it's been going on for a long time, and it's going to all come undone eventually. And as well as that, it outlined plans to unwind its massive bond buying program, which is what it's been doing to keep its yen at where it considers a comparable competitive rate. And it's been just stimulus measures. You think of it, they've done it. And that announcement sent the part of the world, the futures part of the Forex, rather, part of the world, and the correlated carry trade, what's called the carry trade. And basically what the carry trade is, it's massive. It's reputed to be worth 20 billion with a B or more. And of course, there'll always be endless levels of hypothecation that are not disclosed to the market. It may be worth double that much. The carry trade is basically borrowing yen at very, very cheap interest rates, and using that money to buy other assets that have higher earning potential. And a large part of that is the big-time tech stocks, which gives you some explanation of the incredible run-up that the Nasdaq's had. But a tiny little infinitesimal rate hike from 0 to 1/4 has set the Forex world into panic, as they apparently everyone has to unwind their carry trade. It's that sensitive that 1/4% is going to ruin the situation. Well, let's have a look what's actually happened there. It's a lot more, I should say, it's a lot less dramatic than it sounds. All the yen pairs, of course, have been hit, but they're not hit that hard. It looks dramatic there. You've got, this is actually a 3-day chart. You've got 1, 2, 3, 4, 5, 6 days down in a rally, 18 days, 19 days trading, and it hasn't taken out even the first important swing. But it's certainly a big move down. Same things happened in the British pound. This is the British pound Japanese yen pair. Exactly the same thing. And of course, even the US dollar yen trade, you can see exactly the same thing happening here. And with this, as I say, lots of drama in the media, including the single biggest day down in the topics, the Nikkei index, and followed by the single biggest day up, when the Bank of Japan hurriedly put together a joint statement with the other Japanese monetary authorities saying they wouldn't raise interest rates while the markets were in an unsettled position, which was sort of a mea culpa, and so sorry guys, we didn't mean to do this. But have a look how little all that's done. This is a massive, massive piece of drama in the financial markets. And what you're looking at here, this is the S&P. And look what all of this has actually done. Very, very little. It's run down to its there's the second one, 59, 50. The second retracement of the major swing. That's it. The black line on this 3-day chart is at 5047. If this down move is going to move any further, you're going to have a daily close below that line. And it's nowhere near that, and it's rallying. And look how exactly it rallied. If this is a panic move, like all panic moves that I'm always amused about, why is the market hitting exactly the Danielcode numbers? And I do mean exactly the Danielcode numbers. Let me see if I can give you some indication of what that actually happened. So here's your down move in the S&P, and the low of that is 5120. Okay, have a look at that red line it's sitting on, folks. That's straight off the Danielcode retracement tool, and it's at 5121.75. That is 4, 5, 6. That's 7 tick variance. How can this be a panic move if it goes exactly to its Danielcode numbers? And it does this all the time. And what it's showing you is there's a minor retracement of the major swing, which I've marked there, and there's a significant retracement of the minor swing. But it still hasn't got to the black line, and it has to close below that before it can go lower. So, like the joys with the media, it's always overstated both ways. I guess if you were holding a ton of shares in the Nikkei or the topics, you weren't too happy about it. But that's markets, and this market is, as I say, rational, orderly, and sometimes predictable. And what happens now? Well, those of you who spend a lot of time with us will know that Frank DB does his weekly updates on market long-term forecasting. We call it the fourth seal. If you are not subscribed to the fourth seal, let me tell you, this is the time you should be, because to make sense of all of this and the probable outcomes, you need to be reading Frank's long-term commentary, which is very, very good. And as I've said before on this program, the only analyst I know who would prepare to put hand on heart at the 2022 high and say that is not the all-time high. It is going to give a correction, and it will go on to create higher highs, which is absolutely exactly what the markets have done. So if you're not getting that commentary, weekly commentary, and the long-term charts, you're doing yourself a great disservice. Just go to the Danielcode website, click on the services page, and you can click straight away onto the link for Frank's fourth seal commentary. Very important. But this chart puts it all in perspective for you. Yes, we had a little correction. Market's well and truly overdue for a correction. It's all been pretty much one-way traffic with very few alternates, and what a joy. I mean, the delight to be trading futures which pay you exactly the same when the market's going down as they pay you when the market's going up. Quite wonderful, isn't it? And if you're a futures trader, you're being blessed. And if you're not a futures trader, folks, you should be. It is a wonderful, wonderful business. And if we get a little bit more market turmoil, you make a lot of money very quickly when the market's going down. It's wonderful. Okay, so our new Teach Yourself to Trade program, it will be available next week. It's turned out to be a lot more work than I anticipated, and that's my fault, for which I apologize. It's Terry who's got to do all the hard work. But he says it'll be available sometime next week. And I will be doing a special webinar, folks, to introduce you to the 5 video programs that we already have that will allow you to learn the Danielcode magic. And while you're thinking about that, we'll also be sending out some written information on it all as well. But think about the serious business of getting financial freedom from trading. If you're a trade navigator client, you've been getting bombarded with messages from Glenn's, some new guy he's found who's going to teach you a bit about stock trading, I believe. But think about this. If you're thinking in terms of a trading method that returns you less than 100% per annum, you're on the wrong path. I know that's a big statement, but we've spent a lot of time. It's not just me saying it. Having the person who's promoting the system telling you how wonderful it is, that's a non sequitur. That's going to happen all the time. What you want to do is you want to hear from people who've been taught how to trade. In other words, it doesn't really matter to you as a potential client how my trading goes. It's important to you that my clients who've been taught this method are able to say, yes, we understand what he's talking about. Yes, we're getting the results. Yes, we're getting more than those results. Yes, it's fantastic, and you can do the same thing. And that's why over the last few months we've shown you a wonderful interview with Mark L. telling us about his paper trading and what he's discovered about the Danielcode. We've shown you an interview with Scott and Amy, newcomers to trading entirely. Amy said she'd never seen a financial chart before, now turning over 400-500%, excuse me, on their paper trading. And of course, Justin, who's with us today, who's done 3 interviews with us, and the one last at the last webinar is quite extraordinary. He shows you, he's analysed over 100 markets, or 100 years of markets, as he said. That's either 1 year or more of a big range of markets. It works exactly the same on all markets. It works absolutely fabulously on trading Forex, and I've got some more information from Justin, thank you, mate, which I'll talk to you about another time, but it's quite wonderful. Now, if you're interested in thinking about a 20% return on investment or a 30% return on investment, in those sorts of numbers, let me tell you, you're not going to get rich unless you have a great deal of money to start with and you're very young. As opposed to all of that, if you're trading, learn how to trade Danielcode time signals, you're going to be talking about, at the least, Ian Coggins with us, I think, today. He's moved from the far north. Last time I spoke to you, Ian, you were up in Northern Europe. You could even be in one of the Scandinavian countries from memory, and now you're in Brazil. So smart guy, get away from that cold weather. And he's a Danielcode tutorial graduate, and at present he's returning about 150% per annum, and he can double that with some better risk management. He's getting hit with some big losing trades, which have taken some of the cream off, but Mark L., Justin, the others, you should know from them and those interviews they've done what the Danielcode time signals return. And most importantly, we've got Greg Palladini with us today. Greg's a wonderful man, incredibly generous. When he came back to do his second tutorial to specifically learn time trading, he said, I'm going to post everything in the members forum. Let everyone see what I'm doing, what I'm learning. And he's done that. And it's an incredible gift. If you go to the members forum at the Danielcode website and find the thread that says Danielcode trading or Danielcode trade session tutorial, something like that, you can see all of Greg Palladini's posts about what he learned, what he did, what he's found out about the Danielcode. And that's the important point. Can this thing be taught? It's not what I do, it's what my clients can do. And that's why we're so grateful to them, all of them, for them being so open and honest and happy to tell you what they've found, what they've experienced, and it's an incredible thing. So bear in mind, if you're looking for a trading system, you need a trading system that performs as does the Danielcode time signals. And it's proven, and as I say, we've got a pretty fair number of clients who are happy to attest to that. So here's the next thing beyond Masterclass. I've been thinking about momentum for the last couple of months, and I had a conversation, or at least an email exchange, with Mark L. And I said, what do you think we could do to improve the Danielcode time trading signals? And he said, you can't improve it. It's perfect. It produces massive, massive returns. It works across all markets. It can't be improved. And that might be right. But there was something in momentum that kept fascinating me. And eventually, after many years of looking at the same chart, the penny dropped. You'll have worked out by now that I'm not too bright. Most things take me time, longer than clever people work this out in 10 minutes, not me. But momentum is like an elastic envelope around the daily bars, and it expands and contracts. And markets can stretch these levels, but it's telling you something. And as Mark L. said correctly, you can't improve the DC time signals, but we can add some value, I believe, by understanding what these new signals beyond Masterclass, we call the Danielcode trade tutorial, where you can learn to trade Danielcode time signals. We call that Masterclass. That's the version that I teach. But from next week, you're going to be able to do that course for less than 50% of the cost. But we can add value by understanding what these momentum signals tell us. And what I've been able to do is identify the various market segments because their behavior is different. And we can now distinguish between commercials, CTAs, that's Certified Trading Advisors, big group of money there, and private traders. Now, this is not related to cotton. This is not related to the commitment of traders. It's just I use the same word, commercials, and I don't mean that to be misleading. From commercials, I mean the super big heavyweight traders, the big institutional traders. And you can see, once you understand this idea about momentum, and how accurately we can measure it, that you've got two entirely different groups. You've got the commercials doing one thing, you've got the private traders doing pretty much the opposite, and the CTAs swing between them. Sometimes they're with one, sometimes with the other. But the CTAs are fairly transparent. They have price levels at which, for example, they'll go 50% short at that level and 100% short at that level. Any system like that is telling you they don't have a lot of confidence in what they're doing. It's like, I'm going to put a toe in the water for a while, and then if that still works, I'll put the other toe in it. But the levels that the CTAs use are known to most market participants. It's not a great secret. So this is not related to commitment of traders at all. And the commercials are the key to this program. They're the dominant market force, and they're using a set of market time signals and private momentum signals run on a faster time cycle. So the privates are a little bit faster than the commercials, and the commercial CTAs and private traders, they all use different time signal and different price points. So there are two things that are happening beyond Masterclass. It's not just the time signals, it's a price movement as well that works with it. And these beyond Masterclass trade signals are created from both futures charts and from the index charts. And they're slower than our own DC time signals, but as I say, there's some important information there. So have a look at this. This is UST bonds, and these are the Masterclass signals and where they've switched. And for some of them, they're very, very close to Danielcode time signals. But what I found interesting, you'll see what I found most interesting in the next chart where it becomes glaringly obvious. But you can see, for example, let me get a tool so you can see what I'm talking about. This is called Spotlight. Here it is. You can see that this sell signal came 4 bars later. This is a daily chart. It came 4 bars later than our Danielcode time signal. This buy signal came 3 bars later. This sell signal 3 bars later. This buy signal right where we had the Danielcode time buy signal. Up here, 3 or 4 bars later. This buy, 3 or 4 bars later. So what is the purpose of this? If we can identify the highs and lows days before the commercials can, why would we be bothered with the commercials? Well, what they're showing is that they have a remarkable affinity to keeping the move going. This is a wonderful example here. There's a high that was identified by the Danielcode time signals as a sell. We got 2 days down. At that low, there was a Danielcode buy signal. We went back up again. The Masterclass switches right through that. It's not sensitive enough. Well, it's telling us the truth that the commercials didn't worry about that little pullback. And they didn't worry until 2.5, 3 weeks later when the sell signal came. And look where this sell signal came from the commercials. Up here, this high here is where we got the Danielcode time sell signal. Then down here into a buy signal, and then this was our second sell signal. But it's the first sell signal for the commercial. It's very, very interesting. It's also very, very clever. So let me get rid of that and show you where I think the big excitement of this all is. Or something or other. What am I looking at here? Just bear with me. I'm well and truly overdue for a new set of glasses. In fact, I've got to have a where they put the lens in your eye, whatever that is. What's that from Anthony? Sydney, quite right, mate. Glenn should spend more time on keeping Trade Navigator up to date. It's failing badly behind its competitors. I was a long-term client of theirs and have now left them here. And they're not doing intraday bars for futures as well, Anthony, so I think that's a fair comment. Anyway, let's move on. So this next chart I'm showing you is gold. This is very interesting. And you can see here that much the same thing. It's getting in. These are the commercials only. When you're doing the actual analysis, you can see a level for the commercials and a level for private, as I say, with the CTA swinging both ways. But the commercials are the dominant force. You can see here much the same as I was showing you on the previous chart. Buying 4 or 5 days later than us. The sell certainly later than us, the first big sell you can see there, and all the way through the next sell a couple of days late. Sometimes it gets right on our numbers, then that gives you a failed signal there. That's the only one I found in this whole chart, and you can see the second last sell was 2-3 days later than where we got the Danielcode time signal, which was right at the top. But here's the but. This is what I'm interested in. From the big low at the beginning of March, all the way up to the big high in end of April, early May, it didn't give one sell signal. In other words, that whole run up there, which was worth over $35,000 per one contract, a good bit of money, did not have one sell signal in it. And that's what has interested me so much, and I'm very, very excited about it. And you can see here that just getting a few of those a year is going to make your bottom line even better than it is now. So I'm going to be doing a special tutorial on that for you and give you a chance to understand what it does and what the benefits are. We don't have any Bitcoin traders here, but we do have some Bitcoin owners here, don't we? Don't we, Greg? And joy and happiness indeed. But have a look at this method of what the commercials are doing. Now, bear in mind, this is a future chart you're looking at. Interesting. It works exactly the same on the futures and on the cash, and it's just incredibly accurate, isn't it? As I say, apart from Greg, I don't know of any of our clients who are actually interested in futures. And Greg, I think, is what's called a hodler. Crypto guys like to use different language. What they call a person who holds on to their crypto at all costs is called a hodler. They just change the spelling around. It's a bit like Forex in that they try to create their own language. It doesn't really matter one way or the other. But what's interesting is how dominant the commercials are in Bitcoin. Looks to me like a seriously big deal. And more on that as I do something special and deliver it to you. Okay, so the Danielcode tutorial we always talk about, and this is your chance to learn how to create and trade Danielcode price and time signals. And I know the guys who are trading time signals, most of them don't even look at price. And perhaps that's the way I teach it, but I think I've done you a disservice, as I'm going to show you. If you look at price as well as time, you'll be a far better trader because you'll have a really deep understanding of what the market's telling you. And it tells you in an incredibly accurate way. The amazing thing about Danielcode is that how markets know and recognize these Danielcode numbers that are not known to the public at large. And it's incredible. And what you're seeing here is a statement, kindly enough supplied by Mark L. and by Greg Palladini. And if you want to learn to trade and be a super trader, earning those big, big returns, you can do the Danielcode trading tutorial. And just email me, jneedham@thedanielcode.com, and we'll be happy to talk to you about that. There's some extensive material on the Danielcode tutorial on our website. You can read all about it. And as I say, in the next week or so, you're going to have the opportunity to learn to trade Danielcode time signals at a much, much cheaper price. And first of all, congratulations to Henk. H-E-N-K, if you're with us, Hank. If not, he's the first person to sign up for the new Danielcode Teach Yourself to Trade video series. So I'll be writing to you later today and getting you set up for next week, Hank. But congratulations on being our inaugural member. So these are charts of what happened today. And what I want to try to get across to you is that measuring gives proof. And I spend endless time, endless hours doing these charts for you. These are called members charts. We do it on 9 Forex markets and 11 futures markets. And these charts are created twice weekly, more often if necessary. We get a couple of big days like we did early last week, then they get done every day if necessary. But have a look what these price levels are telling you. The red and black levels just come off the standard Danielcode retracement tool. If you're subscribed to our website Pro package, you get that from Tarry. Or you can create your own on any program you like. But look how accurately this stuff is. That big move down. I mean, this is the S&P. This was supposed to be a dramatic move. Look where it stopped, exactly on the blue line. That blue line is at 51.20. That big bar down was Monday, the 5th. This week, and its low was, can you believe it, 51.20 against the blue line at 51.20. Now, I don't make these things up. That blue line's been on there for weeks and weeks. In fact, it's been on there ever since the high. Markets know and understand the Danielcode numbers and react to them. And if you're reading the charts, if you're reading the price charts in conjunction with your time trading, or simply because you're trading price, look at the understanding you get. This market goes down, it stops exactly the blue line. It rallies up, it leaves a little gap. It has an inside bar, it doesn't know what it's doing. It has an outside bar, it's trying to fill the gap. Next day it goes down and finds support at the next red line down, which was at 51.81.75. What was that low there? 51.82.0. One tick of variance, guys. One tick variance. 51.81.75 to 51.82 is one tick. Does this happen often? All the time. Every day, all the time. And you will have a far, far better understanding of what markets are doing if you're getting these Danielcode members charts with these numbers on them. Put them on your chart, just put on the nearest one or two numbers and watch what happens when the market gets there. Markets, don't forget, are talking to you. They're trying to tell you what they're doing all the time. The problem has been, until recently, we didn't have the language to understand what markets were saying. But now we do. Once we've got the Danielcode time and price signal, we understand exactly what markets are saying. And as you can see from this chart and the others I'm going to show you, markets are reacting to these numbers. They know and understand the Danielcode numbers. And they're actually talking to you. At least once every 3 days, the market is saying to you, I know these numbers and I'm tracking them. Sometimes it does that every day for 3 or 4 days in a row. I know these numbers and I'm tracking them. And your understanding of trading is going to be enhanced considerably if you are using these Danielcode numbers. Here's crude oil. We're long oil. We were short on the way down. We're long now. Look where it turned. You can see the black line, what they're just at 71.59. The market turned a little bit above that. Sometimes it'll do that if it's heading into a strong move. The actual low of that bar was 71.67. Pretty nice, wasn't it? 8 ticks variance, that's it. This happens all the time, all the time. Let's move on. Here is gold. We're long gold today. There was a support line on this chart. It's moved off now as time's moved on, but really simple buy signal for today, and up she goes. This is copper. We have a buy signal for copper for today, and you can see how it broke through its flip me point earlier this week. They had a flip me sell there, and we've got a new link on the website that's called Flip Me, in there every day I'm posting the charts that are subject to a flip me, where that flip me level is and what to do when it gets there. So we had a flip me here where it broke through previous support, down bar, little rally back up, another bar down to test the support at 391.60, inside bar. We'll see what happens tomorrow, but we do have currently a buy signal on this market now. Just so you're aware, if we have a buy or sell signal created, whether that's a Danielcode price signal or a Danielcode time signal, that doesn't mean you jump in and buy or sell the market then. That would be hubris, and we don't do it. It's the way you get your head chopped off. What has happening with all of the Danielcode time and price signal is we are reaching a stage in our analysis where we say, this market has met the requirement for a turn, and we think it's ready for the turn. Now, that's only stage one. Stage two, we then require the market to tell us that it agrees with us. And the way the market does that is it goes to a predetermined price level at a high or a low. So when that trade order is filled, we say it's been elected. So all of the Danielcode trade signals are conditional, and they're conditional on the trade being elected. But what's interesting is that when those signals are not elected, they're also telling you something. Recently, we had a rash of TO3 and blue line signals in Forex in particular, as the Japanese yen brought all this volatility into the market. And big moves were sitting up there. TO3, blue line reversal signals, absolutely accurately, absolutely perfectly, and then they were promptly ignored. The market broke straight through them. So think about that sequence, that the market gets to a point where we believe it's ready for a turn, and we put on our orders at a position that the market would have to go to validate those orders. If it doesn't make that turn, if it keeps going, that is a very, very tradable position. So whenever you get your Danielcode time or price signals, the trend is intact until it is reversed. In other words, you can trade the existing position of the market. Okay? If this market breaks down below the black line low, the blue line number there, I should say, we are short now, we'd still be short. We're not going to become long until the buy signal, which is sitting there 2 ticks above either the inside bar or above the true high of the previous bar. Remember, there's a gap in there, and those of you who've done a bit of Danielcode trading know that we have to account for gaps. Charts, you can have a chart high, a momentum high, or a swing high, and they're different things. And what we're always trading are true highs and true lows. And it's very important, if you're not aware of that, go back through some of our webinars, which are posted on the website, and you'll see. This is natural gas. We're long natural gas. We were short for a long time running down. And what you get there at that low, you got target recognition. Then you got a false break. In other words, you got a lower low that didn't hit somewhere on close enough to the blue lines in this case, and that's a false break. And don't forget, fast moves come from false breaks. So we had perfect target recognition, followed by a sort of a semi-reversal bar that didn't really rally up high enough to make it a key reversal bar, but it did the same thing for this market. Up it went 3 days, and we're long. Here's the next one. This is the Russell. We got short exactly from the high up here, and a TO3 and success sell on that bar. We got short, had 3 big days down, support on the blue line, inside bar, little fake rally up, down. Now we've got a key reversal bar up. A key reversal bar, incidentally, is a bar that opens inside the range of the previous bar, makes a new low for the move, then reverses and closes above its own open and above the previous day's close. That's a buying key reversal. A key reversal sell is exactly the opposite, and you can see one of them right here with this bar back at the previous high, and that bar opened within the range of the previous bar, just made a new high for the move, then reversed and closed below its own open and below the previous day's close. Now, that's a selling key reversal bar. And I want to put my hand on my heart and say that was a key reversal bar because it may have opened outside the range of the previous bar. If it has, it's really interesting that you just finish up with a reversal bar that's not technically a key reversal bar, but they do substantially the same thing. Very interesting how reversal bars work. Okay, now move on from here. And here's beans. Beans used its flick me point to get short again. And you can see that I put that flick me point on for you and posted it in the new flick me file. So what is this flick me all about? Well, flip me, I should say, with a P. I've got a K up the top. That'll confuse anyone, including me. It's actually called flip me. And what it is, it's a signal that tells you you're wrong. And if you're wrong, the only way you can get right is by doing something about it, and that something usually means reversing your trade. So that's what the flip me point is, and do go and check every day under the flip me link on the Danielcode website. It's right in front of your face when you go there, so you'll be able to see that. It's important, it's part of your trading technique. Here we are with silver now. We're long silver. Look where this buy signal came from. The market was going down. It had supported the blue line number at 2666. Then it broke through that, and that created, this is not a key reversal bar because the open is outside the range of the previous bar. But exactly as I was talking to you just now, what you can say is that this market found support at the next blue line down. The low of this today's outside bar is 2657.5. Have a look at that next blue line down there. 2651, and the low was, what did I say? 2652.5. 2652.5 against 2651.5. This market moves in half a tick. So essentially that's 2 tick variance. That's it. Pretty incredible, isn't it? Okay. Here is UST bonds. Same thing. We got long right at that low down near the bottom. We had the whole of that run up. Eventually it ran into the blue line. Very, very powerful, these Danielcode blue lines. And the high of that bar, right at the top of this chart, was 126.77. What's our blue line number there, folks? 126 correct 27. Amazing, isn't it? And that was the true high, and the blue line, 126 correct 27. The high of this bar that I'm on now, 126 correct 27. In other words, 0 variance. Perfect target recognition. How does it do that? That blue line's been there for years. Well, I exaggerate. It's been there for weeks at the very least, because it comes from those lows, previous lows that you can see. This stuff is deadly. And if you were putting these numbers on your own chart, even if you're just trading time, as I know a lot of you tutorial graduates are, if you just put these numbers on your chart, it's going to give you a much better understanding of what the market's doing. And look what this guy does. He turns exactly at the blue line. 1 bar down is still on the chart. The second bar down here, the low is 122.09. Look at the red line. The low of that red line is at 122 correct 12. 3 ticks variance. That's it. What about today? It moves down further today. Today's low is 121 correct 17. That little arrowhead symbol, which comes from the rule of 8s, incidentally, is probably called a correct. So the low today at 121 correct 17. Where's the red line for today, folks, that it's sitting on? Now, this number has been on here since the high. Okay, what's that number? 121 correct 17. Exactly. 0 variance entirely. Amazing stuff to see. Excuse me. So, putting these numbers on your charts, these daily numbers on your daily charts, is going to give you a far different and a far better understanding of why markets are doing what they're doing and how they're moving. So, in regard to something entirely different, I do want to show you our 6-day charts, which some of you get. They're quite extraordinary. But I've left this up here for you for a while. Take a screenshot of this, folks, or quickly write it down. The first link here is to an interview that Mark L. kindly did with us to tell us about his paper trading while he was doing his tutorial. The next one down is Amy, and I can't remember what his name was, but Amy was lovely lady, very memorable. I won't forget Amy. And that she's never seen a trading chart. No, she's a super trader, knocking off 500% in wheat, as I recall. And the next two down, and there's another one still to be added, that's Justin. And the research that Justin's done and his generosity in sharing that with all of you is extraordinary. I mean, that is a lifetime of work that he's done. He's back-tested, as he said, over 100 years of Forex and futures market. And he's put it all out there for you to see. The generosity of these folks who are our members is so great. They're so kind to us. And we really, really appreciate that. Okay, let's see if we can get quickly to what I want to show you, if you'll bear with me. Here's the flip me signals under this tab here, folks. And these, what I want to show you, are the 6-day charts, and we do them for UST bonds, the one you can see here, gold, the one you can see here, S&P, amazing, and crude oil, and they're done twice a week. And these 6-day price levels are the next level just beyond what you can see in the daily charts. They give you a really, really powerful view of what markets are doing. And if you're subscribed to our DC website super package, you'll get these twice a week, sometimes more often. So go ahead with that. Let's go back to where we were. And flip this over. And we're back where we were. That's wonderful. So have a look at those links, folks. Do go through that, see what these guys have got to tell you and to share with you. It's so wonderful. And in the meantime, if you haven't already had a free trial, go ahead. Take it, help yourself, register for a free trial. Go to the website, www.thedanielcode.com. Just hit the register button. Any issues, contact Terry at support at the Daniel Code. And finally, almost finally, this is our disclaimer. It tells you that it's very, very easy to lose money in trading futures or Forex if you don't know what you're doing. The good news is it's equally easy to make a whole lot of money in futures or Forex if you do know what you're doing. So get educated. That's the message, folks. Get educated and you will have a long and happy and prosperous life. Okay, so what am I up here for? Just let me see what Jim's asked here. What's the difference? Is it all recorded presentations instead of live trading? Where are those videos, Jim? They'll be available next week, Jim. Yes, we've got two schools of thought about teaching you trading. One is called Learn to Trade. That's where I teach you, and you'll have typically 5, 6, 10, even sometimes more sessions with me, each less than 2 hours, where I teach you all about trading, price, and time, which is the vital one. And that's pretty expensive. My fee is $7,500 for that course. And what I've been wanting to do for years is to make that more accessible. In other words, make your success affordable. And that's what these new video series is, Jim. They're just recordings. It's all recordings, so my time's not involved once I've done the work. So I'm able to offer you those programs at a fraction, less than a half, much less than a half of our normal fee, and they'll be available to you in the coming weeks. So as I say, I'm going to do a special tutorial for that. So stay tuned, guys. Where we are. Second question referred to the 4 videos that are there, both time and price. These when we do our video series, we have a different series for time and price, so the recordings are both time. Well, they're both there. You can choose whether you want to learn time trading or price trading. You'll be a better trader if you learn both, but I guess the immediate push for most people is to learn to create and trade Danielcode time signals. That's where the big money is, and they're the people that we've been talking about that have been kind enough to give us interviews. Okay, so that's it for the moment, folks. Don't miss the next webinar next week, where we'll be releasing and talking a lot about the new video series. Until then, goodbye. Thank you for being with me, and I look forward to talking to you again soon. Bye-bye for now.